Hello, everybody. I'm Eric Christopher, president of WSC Realty Advisors here in Long Beach. I've been an apartment broker and property manager here for 15 years. And today we're going to be talking about investing in apartment complexes in Phoenix, Arizona. Lately, we've been seeing quite a bit of capital flowing across state lines into other markets, and Phoenix is definitely a popular destination for that. Now, if you didn't get a chance to watch my previous video of a couple months ago, I dig into the background as to why we're seeing the outflow of capital into other states and give you some background on that. And it also covers my visits to the Tucson and Reno markets. So here I share with you a map of the Phoenix area. I guess the question would be for you, when was the last time you visited over there? For me, it was quite some time. And let me tell you, I was blown away by how big it has become. It really felt like I was driving around LA or Orange County when I was there. Currently, it's the fifth largest city in our country behind LA, New York, Chicago, and Houston. One of the things I wanted to point out was the growth outside of Phoenix proper. What you're going to notice if you're there is down in the southeastern quadrant here, you're going to see some cities that have really grown: Tempe, Mesa, Gilbert, Chandler, and then out west to the west side, you have Glendale and Peoria. Now, there's apartments in those markets as well. As I mentioned, most of the investor grade 5 to 50 unit buildings are kind of located in this box, which runs basically north of the 10 up the 17 out east to Scottsdale. That's where the primary concentration of the product that most of us would be looking to invest in. Now let's do a quick comparison with Phoenix metro area against maybe a group of its peers. Now we won't go through this whole matrix because I'm sure everybody'd be asleep by the time we got done with it. But there's a couple points that I circled in red that are interesting, aside from just kind of maybe sizing up the population against some of the other cities. Now, as this report shows, this is another brokerage report that I obtained. The population shows just under 5 million. But I'm certain that they've surpassed that now. And the reason I say that is look at the population growth, which is just the first circled red item. They're growing at a clip of over 2%, a little over 2.5% a year. So quick math on that, 100,000 people a year moving into the area. That's an easy visual if you picture the Rose Bowl full on New Year's Day. That's how many people are moving into Phoenix each year. So you can imagine that's going to play into employment and rents, which we'll get to in a second. Now, the resiliency is something else we should consider. Obviously, the whole country, every city, every state, we've had problems with unemployment during COVID. Now, last year in May, kind of call it the doldrums of COVID, Phoenix had the lowest unemployment rate of any city, any large city in the country. Their unemployment rate recovered back pretty quickly to 8.3%. You can kind of scroll your eyes across that page to see where the others were landing in that same period of time. So population growth, a very resilient unemployment base, and we'll get to the bottom two in a second. Right now, their rents are growing at over 5%, close to 5.5% per year. That's the nationwide high. The one below it we'll touch on in a minute as well. Their vacancy across the entire market and entire product spectrum is about 5%. Well, like I said, we'll drill down on that in just a minute. Now, the difference between, say, Phoenix and Las Vegas, because I know a lot of people say, well, Las Vegas is close by too. Look at Phoenix's employment base and how it's distributed. And why I say that is Las Vegas is, nearby, close, large metropolitan area, but they are so reliant on leisure and hospitality to the tune of about a third of their workforce, maybe a little more, that they live and die on the tourism industry. And we've kind of seen them take a hit with the COVID thing. Whereas in Phoenix, you have a much more balanced employment base. As you can see, trade and transportation, they're a huge distribution hub for the entire country. Government in Arizona is pretty big. So you can see a balance, whereas the leisure and hospitality only plays an under 10% share, which in this discussion is kind of a benefit. Now let's just look at vacancy and rent growth across the country and maybe a few more markets that are close to home. As I mentioned, Phoenix growing at about 5.4% year over year rent growth. The interesting part is that their average one bedroom rent still trails the national average by a couple $100. So what I'm figuring is you're going to see that average rent per number grow toward the average and maybe surpass it with all of this incoming population and good employment growth. Right now, as I mentioned before about the vacancy rate, across the entire region and product types, 5%. But take that with a grain of salt, because what they are doing is they're building Class A, mid, and high-rise stuff kind of throughout the city. That's got a different vacancy and absorption trajectory than maybe the B and C workforce class stuff that a lot of us might invest in. So what we have is two separate markets. They're growing in the Class A. That's a little bit higher of a vacancy because there's more supply. There's not as much supply being brought on the B and C grade stuff. So you're going to experience a vacancy rate over there that's very similar to what we have here in LA, which is probably something like 3 or 4% on average. So that's a very interesting dynamic of the population growth, employment, and then how that boils down into rent growth. Let's do a quick down and dirty comparison. And I use just the sum of $1 million if somebody was to do a 1031 exchange out of somewhere over here, or if it was a fresh capital investment. Certainly it could be smaller, but I just use that $1 million round number. Right now in Long Beach, the average cap rated sale, and I can show you this if you'd like, is still under 5%. And if you can find a 5% or better cap rate, you're usually talking about maybe a tough building with some deferred maintenance, maybe in a tough area, maybe both. Could be older studio buildings with challenged parking, things like this. Now, what you'll see in Phoenix, in that red box, which is a very, very nice area, nice demographic, a lot of the buildings are already turnkey rehabbed. You can buy those buildings, turnkey rehab, B area, B property kind of scenario for 5.5 to 6 cap. Turnkey, ready to go. Now, if you can find a value add, and it's getting a little tougher over there to do it, but if you can find something that's, lagged on maintenance and rents and whatnot, you can achieve that for over a 6 cap, but a little tough to find. But my point would be, hey, why not take a building that's already fixed up in a better area at a better cap rate than something you could buy in Long Beach? Now let's move on to a few real world examples, which will show you exactly what I'm talking about. Again, all these buildings I'm going to show you today are within that red box. They're north of downtown, and from north of downtown and north in the 10 is called Uptown, and then there's Midtown above that. So these are all kind of in that submarket, very nice neighborhoods, very nice retail around the properties. Again, feels like you're driving around Orange County or a nicer area of LA County. This is a recent sale that just happened. This is just off the 17, just slightly to the east of the 17, about a mile and a half north of the 10. Complete rehab. What you're going to see here is a lot of buildings built in the 50s, 60s, maybe 70s that have got major rehabs done in the last 3 to 4, 5 years. This is a good example of that. So you've got a really nice unit mix. This location is right next to a medical kind of vocational college, nice retail around it. Really good area. A California investor bought this property at 2.5 million. It was down from 2.75. That happened just last month. But look at these metrics, okay? When's the last time you saw these metrics in Southern California? 11 times gross, pushing toward a 6 cap with some rent growth, 138 per door, $200 a foot, 220 a foot in a really nice location. This is kind of the draw. I'll show you a couple more of these. The next one, this was the first building that I saw, and I said, wow, this is in the Uptown section of town, just north of the 10, probably quarter, half mile. It feels a lot like you're driving around Costa Mesa in this neighborhood. You've got all the nice retail, nice demographic walking around on the streets. But this building just blew me away, kind of an old Spanish style built in 1950, but the current owners put in about 800,000. Made this thing look a little bit like a mini country club. All 16 of these units are 2 bedrooms. The lower levels having private yards, either front or back. The 3.78 price tag. But look at the metrics. 13.5 times gross, about 5.3 cap. Cost per unit and cost per foot. That equates to one of these beat up 80s buildings here in Long Beach at 230 to 260 per door, between $300 and $350 a foot. There's really no comparison on what you get for your money. Here's a really interesting one that's 11 units, and this is about a mile up north from the one I just showed you. 48 construction, but again, a major rehab in 2019. Now, there's a couple reasons why I show you this one. This is on a stretch of road that has all very large, oversized lots with single-story, multi-building complexes like we see a little bit around Southern California. The metrics are great, above a 5.5 cap going in. But the cool part is across the street, they're building mid-rise Class A luxury, either townhomes or condos or apartments. I couldn't really tell which style they would be, but the redevelopment around this whole area is robust. So for example, maybe you buy this building or one similar to it, you have a nice cash flow equation, but then as an outside exit strategy, maybe one day here comes a developer knocking on your door saying, hey, I'm buying all the properties on this block, and you've got an alternate exit strategy that maybe you didn't have over here. So the previous ones have been already completed sales recently, last month and this month. Here's a listed opportunity. My contact, one of my prime contacts over here, just shared with me, just listing this property. Now, this is 1985 construction on Mountain View Road, which is just about another mile or so above the last one I showed you. Again, all of them are in that red box from the map that I'll bounce back to in a minute. This is masonry block construction, so it's bulletproof, all 16 units, 2 bedrooms. Listed at 2.4, probably a little bit of flex in that. But again, when is the last time you saw something that was decent in a decent neighborhood? This one's surrounded by single family homes. I visited this when I was there. Very quiet neighborhood, 150,000 a door, 197 bucks a foot. That equates to, seriously, in Long Beach, 150,000 per door, under 200 a foot is a really rundown studio building in a bad area. That's the exact comparison there. And this one's available now. So if you're interested in something like this, give me a call. I've got all the information on it. I've got all the numbers, last 2 years operating record and everything. This is available right now. Lastly, I want to bounce you out of Arizona for a minute. We're gonna kick back up to Reno, which was the part of the subject of my last visit. And this is my contact just shared this with me. He hasn't even listed it yet. It's going to go on the market here in the next couple of weeks. But this thing is amazing. Okay, again, sort of the same idea. 60s built, major rehab last year. Okay, so we've got a price that's getting a little higher than Phoenix, but let me share with you why this is interesting. Right above downtown Reno, there is the University of Nevada, Reno, a smaller campus than, say, U of A or of Arizona State University. It's about half the size of those. But this property is located just across the street from the university. It's almost situated in Greek Row. And, student housing is a pretty interesting equation. This one, again, I'll show you the overview of it. Here's the campus of University of Nevada, Reno. This is kind of the University Village, which kind of extends up and down University Terrace. Here's the property right here, beautifully rehabbed. Everything has been taken care of in this property. Now, if I was standing on top of this campus building right here, looking the opposite way down toward the right lower area of this picture, you'd see downtown Reno just about a quarter mile or about a half a mile in the distance. So centrally located. There's a hospital up the way that about half the tenants work at that hospital. And I'd imagine you'd have some student housing there as well. So just a new, interesting, pre-listed opportunity in Reno that you could talk about today. So how can I help you with all this? Well, in the continuum, if you're thinking about doing an exchange into an out-of-state market, I can definitely assist you in getting the highest possible price for your down leg here. I've been doing that 15 years. I've got a lot of experience on how to generate multiple offers on your property. But once we get there, I'm going to be able to help you like most other brokers are not. And that's going to be to tap you into this out-of-state platform in whichever market or markets you'd like to look at. I'd suggest, heck, let's pick out a couple that you might see yourself owning in. Could be Tucson, could be Reno, could be Phoenix. My next visit's to Salt Lake City as soon as the snow melts. I will be able to share opportunities with you that you would not find otherwise. So it's all about giving you more options. And with my relationships with the brokers, and I've vetted out managers in each of these markets, you get access to more of those opportunities than doing it yourself. And it doesn't really cost you anything because I've already done the work. I'm already nurturing these relationships on a behalf of other clients. So you can jump into that, generate more opportunities that you might like to look at and to own in the future. And heck, if you're sticking around Long Beach or Southern California, our team can do a quality job on property management. There could be a continuum there where we manage the thing for a few years, get the rents where they want to be, do the improvements, put that plan in process for the next couple of years, and then look at some of these out-of-state markets. So please, again, if you didn't see the previous video, check it out. The link should be there on the YouTube that you're watching or in the email that I invited you to view this one on. And give me a call with questions. Eric Christopher, WSC Property Management and WSC Realty Advisors, area code 562-546-3550. And I'm sure glad you joined us today. Stand by for the next one. It's going to be all about Salt Lake City. In the meantime, give me a call and we can talk about your ideas.